So first of all, you can successfully apply for a mortgage if you are employed on a fixed term contract. What lenders are looking at is the amount of time you've been employed in that type of work, the amount of time you've been employed on a fixed term contract, how long you've been on that contract for, and how long is remaining on your contract.
Okay, I want to buy a house tomorrow, and you're like, yeah, that's not how that works.
Will you ever be able to own 100% of that property?
It's even a question that I haven't even asked.
Most lenders want to see a maximum of 3 months pay slips. Second job income absolutely can be used for your mortgage affordability.
One of those things you don't even think that you can add into the number, but it turns out you can.
Market is in a good place. The market is moving and people are buying homes.
But what if things skyrocket? How am I going to be able to manage?
To be clear, it is completely normal to feel like you are overwhelmed, to feel like it's quite a scary thing. You know, house prices are 9 times the average income. I believe in 2023, there was less first-time buyers than any of the previous 10 years.
In my head, I'm going, that's going straight to the red line, and then you've got no breathing space.
There are other ways that we can manipulate your monthly payment.
Actually, they're not as evil as some people paint them out to be.
Please don't miss any payments.
No.
If you can avoid it, your house could be repossessed.
Welcome back to the Not Quite Pod. Today, we've got a really interesting episode with Dan. Dan, do you just quickly want to introduce yourself and let everyone know a bit about yourself?
Yes, so my name is Dan, Dan Knott, sometimes known online as Dan Does Mortgages. I'm a mortgage advisor who helps home buyers across the country to take those first steps, typically those first steps onto the ladder. I do work primarily in the first-time buyer space.
I'm actually buzzing for this. I was saying to Dan at the beginning, it's what my mum does for a living. However, my mum is nowhere near as camera ready as Dan is. And I'm so looking forward to opening the conversation of mortgages, because it's one of those things where it's still a bit of like, not even a taboo. It's just something that people don't get talked about. So for first-time buyers in the space that you work in, everyone, particularly in my age group, everyone's buying houses and doing stuff, but everyone's like, they're like a rabbit caught in headlights. They don't know what to do. So the first question I want to ask, to really start really basic, is what is a mortgage?
So a mortgage is a loan used for the purpose of buying a house, and the loan is secured against the house. Okay? So that's how a mortgage will be different from a typical loan.
And a lot of people look at, when they're looking at buying a property, or I'll use the term using property, what a lot of people look at either renting or buying. Obviously, you work primarily in the space of buying. What do you see a lot of the struggles of that, of particularly the market that we're in at the moment, of everyone seems to be renting because they're fearful of the rates and everything? What have you seen from clients with that, in terms of how do you not mitigate it, but guide them through the process of the worry of not knowing what a mortgage is, knowing whether renting's a better fit, whether buying's a better fit? How do you guide them through that?
Yeah, so, to be clear, it is completely normal when you are buying your first home to feel like you are overwhelmed, to feel like it's quite a scary thing. Why? Because you've never bought something worth hundreds of thousands of pounds before. It is scary. You've never done it before. It's the biggest financial decision or transaction of your life. That's completely normal, especially in the current market and the current day as a first-time buyer. It's hard. It's hard to buy your first home. The average age of a first-time buyer now in the UK is 34, of which some may deem relatively high, but reasons for that, the average house price is 9 times the average salary. If you go back, 30 years, as an example, 30, 40 years, it's going to be closer to 4 times. That gap is widening year on year. Interest rates are maybe higher than where they were 5 years ago. A few other bits and pieces, but there's a lot to navigate. So a mortgage advisor, my job is to hold somebody's hand through that process.
It's a really tough job. Having watched my mum go through it, clients, as we've said at the beginning of the episode, it's a very stressful period, but also it's a very unknown period. So guiding someone through it, I must admit, you must be like a bit of a chameleon in terms of how, because each person will require a different level of support because some will be more confident than others. What are some of the big mistakes that you've seen with, what are some big mistakes you see with mortgage applications and people looking at mortgages? Because I know there's a lot of things that people need to consider that they won't necessarily know to consider.
Absolutely. So the overarching theme with mortgages and any issues with mortgages is always preparation or a lack of preparation. So there's a few things that may fall under that banner, such as, first of all, not saving a deposit. Second of all, maybe a lack of awareness or a lack of care around credit history. Thirdly, maybe either not working with an expert or not working with an expert early enough. That would be three things, but they all come under that banner of preparation ultimately.
Is there, one of the things I remember seeing another mortgage creator talk about is the lenders don't like if you use comedic references on payments when you're making payments to friends, families, and so on. Is that a thing, or is that a bit of an old wives' tale?
The mortgage myth. So I've done a lot of mortgages, and typically for the demographic is typically younger people who may be more likely to put silly references on the bank transactions. We've all done it. Trust me, I've done it. No, I've never, ever, ever had a mortgage lender come back to me to raise an issue about a silly reference. Okay. At worst, the lender may have to question what a transaction is. But lenders, the people working with the banks and the building societies are humans. Common sense approach. They are not going to decline your mortgage application for a silly reference. The reason you see it so much online is because it's just a quite good social media post for a mortgage advisor. But no, if you can find me a mortgage advisor who's ever had an application declined for a silly reference, I'd be very surprised.
What are some things that can affect your mortgage application? Like, what are some things to watch out for? I know that some lenders aren't. If they see a high level of betting, gambling, and things like that, they don't necessarily like that. Is there anything else that people need to watch out for when they're looking at potentially leading up to applying for a mortgage or in the process of applying for a mortgage?
Yeah, so every mortgage lender has their own criteria for specific mortgage products. For you to be accepted for that mortgage, you need to meet that criteria. Now, there's so many moving parts, okay? So that could be income, debts, credit history, children, the size of your deposit. Sometimes things like age can impact the length of the mortgage that you can take, how long you've been in the job for, the type of employment contract, whether you are how long you've been in the UK for, do you have permanent rights? There's so many different variables to consider, and every mortgage product with every mortgage lender may be different. So, just because one mortgage lender maybe states that you don't meet their criteria and they won't give you a mortgage, that doesn't mean that the next, the lender next door won't be more than happy to.
What about, is there any tips that or things that people don't realize that they can do to help a mortgage application? Is there any, because there's a lot going on and you can sometimes feel like the mortgage lenders are kind of the bad guy and you're just trying to please them. Is there any sort of tips that you can get, any sort of tips you can give in terms of trying to improve your chances, and not improve your chances, but improve the quality of your application?
So I would always just say it's never too early to speak to a mortgage advisor. Even if you are 2, 3, 4 years away from buying a home, it's never too early to just have a call with a mortgage advisor and run through the basics of your circumstances. So, in theory, if I was to buy a home today and my income is this, and I have this level of debt and I've got 2 kids, and if I want to buy this house that I've seen for X amount, would that be possible or not? A mortgage advisor could then let you know, right, in principle, you could achieve that. Or if not, maybe your income needs to increase, your debt needs to decrease. And just finding out at that early stage, having a rough idea of where you're at with it, what changes need to be made, and lay some initial foundations for moving forward. Because the last thing you want is to get to the stage of buying a home and finding out there's a major issue. So it's never too early. Just have a conversation with somebody who really understands, to give you some clarity, to give you some confidence, some peace of mind, most importantly. And yeah, to sort of clear that path for moving ahead.
I suppose as well, I would imagine that prepping early also relieves a lot of stress because you kind of know what's coming. I think a lot of people come to mortgage advisors going, okay, I want to buy a house tomorrow. And you're like, yeah, that's not how that works. There's a lot of work that needs to go into that and a lot of prep. So if you don't know the prep, it can make that journey of buying a house so much longer.
Absolutely, it can be. And the last thing you want when buying a house is for it to be majorly stressful in your life, because you're going to be nervous regardless. You're going to have anxieties about certain parts of the process. That's normal. But you want to minimize that where you can, and there are areas that you can minimize it. I always say to people now, mortgage advice, and your mother may agree with this. Mortgage advice maybe used to be very transactional in terms of what somebody in my job would do. It was a transactional job. That's not the case anymore. It's moving a lot more towards relationship. And that's something I focus on with my home buyers. So working with somebody who maybe you trust, you like, and you're happy to discuss these things with, because you could have a relationship with your mortgage advisor for the next 30 years. Working with somebody who you're comfortable with will just enable that process to be a little bit more enjoyable, rather than, a lot of the time. Well, I'll be honest, when I bought my first home, I actually wasn't a mortgage advisor. I worked in finance, but I wasn't a mortgage advisor. And I just worked with whoever the estate agent worked with, whoever their advisor was. I said, yes, I'll work with him. And I didn't like him. I didn't think he did a good job. And that impacted my experience. And I was quite nervous about asking questions, because I felt like any questions I asked were stupid questions. And that was actually one of the things that triggered me into moving into the job. Because I thought, I've always worked with people. That's what I'm good at, building relationships. And that literally, me buying my first home and my experience was the trigger to me thinking, right, I'd like to be a mortgage advisor, because I feel like I could allow people to have a much better experience.
You're completely right. I mean, it's exactly the approach my mum takes of, it's a very hand-holding and it's generates more of a friendship, as opposed to, oh, we're just here to help you through this journey. Like, I've never enjoyed dealing with mortgage advisors that are directly attached to the sale, because it just feels really like rabbit down your throat. I remember one situation, I was looking at property and the estate agent was really pushing me to go, I'll go with our person, even though I'd gone to him, my mum does it for a living. Do you really think I'm going to trust you over someone I live with? Don't know.
Exactly. And whoever's right for you will be different for everybody. I've worked within large banks in the past. Now I'm an independent one-man band. I don't wear a shirt. I don't wear a suit online. And that's just sort of my approach. That is for some people, but it's not for everybody. And that's absolutely fine. Somebody's ideal mortgage advisor may be the person who works in the big corporation in a suit, has a briefcase, and that's absolutely fine too. But it's about choosing whoever's right for you, whoever that may be.
Especially because it's such, as we said at the beginning, and you said perfectly, it's the biggest transaction you're most likely going to have in your life. You want to have someone that you trust by your side guiding you through it, because it can, as I say, it feels very daunting. You go, I don't know what the hell I'm doing, what people are saying to me. And I think as well, having the ability to explain stuff in plain English is another big thing. And as you said, with the stupid questions, there aren't any stupid questions really, especially with that sort of transaction of you've got to know what's going on and understand what's going on, because it's a big commitment.
Exactly. And I actually said to somebody today, the job of seeking the cheapest mortgage deal is easy to me now, as it will be to your mum. We've done it that many times. That's no longer the hard part of the job. The challenge, or what the main focus is on, is providing clear information, establishing a strong relationship, is being there to answer questions regarding not only the mortgage, but in relation to the estate agent, the solicitor, the survey. I always say I'm in the home buyer's corner, essentially. I'm on your team. I'm in your corner, which would be different, as you've mentioned, if you may be working with an estate agent's advisor who's linked with the sale, who's not on your team.
100%. And I think as well, that's probably the bit that I always explain in the best way I can, redirect to professionals like yourself. There's a lot of hidden costs and things people don't realize. So what are some of those hidden costs people don't realize? Like one of them for me was solicitor fees. I was like, what? Why the hell have I got to pay solicitor fees? And that was one that I didn't know.
Yeah, so there's a few different fees involved in the process. So you will have to pay a solicitor to carry out all of the legal work involved in buying a home. How much exactly that will be depends. I couldn't say right now, but it depends on the house you're buying, the purchase price. Is it leasehold? Is there a gifted deposit? Which solicitor are you using? Are there any adult occupants? There's so many variables. But a solicitor will cost you money. And what I would say is establish early, how much the solicitor is going to cost. Get a rough idea just so you can make sure that money's in the bank. Okay. As well as that, mortgage advice fees. So mortgage advice fees can range anywhere from, typically for a residential purchase, anywhere from £0 to £1,000. Okay. As well as that, not only will the fee differ from advisor to advisor, but how and when they charge the fee will also differ. So some advisors will charge up front, some will charge on decision in principle, some on application, some on offer, some on completion. Now, as an advisor, I always say I've got no issue with how any advisors charge fees, but it's important that if you are working with an advisor, you are clear on, if there's a tie-in, what fee is payable, when it's payable, just again to avoid any stress further down the line. Now, property surveys are optional, but they are advisable. Reason being, you wouldn't buy a £100,000, £200,000, £300,000 car and not have a mechanic check it over. So a property survey is advisable, but optional. All right. As well as that, mortgage lenders may or may not charge a fee for the mortgage product. Not all mortgage products have fees attached. Typically, a lender will charge a fee for you to access a lower rate. And that's a conversation you would have with your advisor, whether it's, what's cheaper overall, the product with the fee or the product without a fee. If there is a fee, sometimes there's options to either pay it up front or add it to the loan. That can be anywhere from no fee up until around about £1,500. So yeah, but a mortgage advisor will advise you on if that cost is payable or not.
And also the surveys also point out any major issues, because I remember I looked at a property and the cladding was one of the issues. So that came apparent very quickly.
Yeah, property surveys. So a property survey, I'm not a builder, I'm not a roofer, I'm not an expert in terms of how a house should be structurally. So I actually moved home in April too. I had a property survey carried out. He told me, right, the roof is going to need replacing in a certain amount of time. The windows are going to need replacing in a certain amount of time. Thankfully, the walls were great. But the surveyor is there to give you this information and tell you things that you maybe wouldn't know yourself. And then you can either, with that information, decide to, okay, great, I know that. Let's proceed as we were. Or do we need to renegotiate a purchase price? Or if the house is going to fall down next year, do we want to pull out?
Yeah, 100%. And also, one thing I would, just because you mentioned it there, a lot of people don't realise that you can pull out of a mortgage quite late. And that always surprises me. There's no tie-in to be like, right, you're going to see this through to the end. So how can you explain a bit more on that journey of how both parties can pull out, you can pull out? It's a bit of a grey area.
Yes. So a property sale or purchase is not legally binding until exchange of contracts. Now, exchange of contracts may come 3, 4, 5 months after you've had an offer accepted for the property. Okay. So up until that point, you can pull out, the seller can pull out. Buying a home in the UK is a little bit mental, really. It is, the process is a little bit mental. People can sometimes pay thousands of pounds towards a purchase and then a collapse. That can happen. But yeah, it's not legally binding until exchange of contracts, which is typically within about a week before completion when you get your keys.
What about because a lot of people get caught out by this one as well, of how long does particularly you work with first time buyers, how long does the mortgage journey take if there isn't a chain? Obviously, with a chain, it's kind of how long's a piece of string. But without a chain, what's the at the moment? Well, how quickly are they completing?
So without a chain, it's still how long's a piece of string. However, that string should be shorter than if there is a chain. Okay, so it is beneficial to be a first-time buyer with no chain. Reason being, the seller's house purchase is not reliant on your sale. Okay, the seller's house sale is not reliant on your sale of a current property. Property purchases can, from making an offer on a property till the day you get your keys, I would say on average it's going to be around about 3.5 months. It could be typically anywhere from 3 months to 6 months. So I actually have a little dashboard which gives me my average at the moment. My average completion time in the last 3 months is 116 days. So that's around about 3.8 months.
Yeah.
That's about average.
And that's, pretty much the same as what I'd heard as well, and what we'd seen as well. But the other thing, I like giving people sort of rules of thumb whenever I talk about mortgages, or again, with the limited knowledge I have, I kind of redirect to just a professional. But what is a general rule of thumb in terms of if you have most people buy, particularly nowadays because of the market and how difficult it is, they tend to buy it in a couple, whether that be friends, whether that be partners. What is a general rule of thumb of how much you can borrow with two people that work in permanent roles?
Okay, so the rule of thumb, regardless of whether you're buying alone or in a couple, is most lenders will lend up to a maximum of 4.5 times your income, roughly. Okay?
Yep.
That comes down from 4.5 times, depending on variables such as your debts, credit history, children, etc. But most lenders go up to a maximum of 4.5 times your annual income. There are lenders that will go over 4.5 times. Nationwide have actually just released, updated their scheme, allowing people to go up until 6 times their annual income. But there's specific criteria points linked to that, such as being a higher income earner, a few other bits and pieces. You need to take a 5-year fix. But yeah, for most lenders, it's up to a maximum of 4.5 times if you can meet that criteria.
Now, the other thing I wanted to ask you, this is a bit of I'm going to go through them because I think it's important to show people what's possible. Because I think if you work in anything that's not a traditional role, it can feel like a rabbit caught in headlights of like, what can I do? What can't I do? So as a general rule of thumb, when you're talking about contract workers, in terms of those that are working on short-term or fixed-term contracts, what does that look like if an individual is looking for a mortgage?
Okay, so first of all, you can successfully apply for a mortgage if you are employed on a fixed-term contract. Again, every lender's criteria is different, but what lenders are looking at is the amount of time you've been employed in that type of work, the amount of time you've been employed on a fixed-term contract, how long you've been on that contract for, and how long is remaining on your contract. Okay, most lenders, not all lenders, most lenders want to see you on a fixed term contract or on that type of work for 12 months. Okay, but it is possible in certain scenarios to achieve a mortgage more quickly. Okay, but those are the things that lenders are looking at, and we do them all of the time.
What about because I think from being fully transparent, my day-to-day job is a contract. I'm a contract worker. What about if your contracts are fairly short? I say short term. I'm thinking like contracts that run three monthly rolling. How does that look for a buyer?
Okay, so just be clear, I'm the same. So before I actually started this job, I spent years and years and years working in contracts in finance, specifically in PPI. So I bought my first home as a fixed term contractor. Okay. So if your contracts are 3 months at a time and they are renewed every 3 months, lenders will look at how long you've been on those contracts for without any gaps in contracts. Okay, and how long you've been in that type of work for. So even if your contracts are 3 months at a time, there should be options. Some lenders may not consider you because some lenders have a criteria point such as you need so long remaining on your contract, but you only need one mortgage. You only need one mortgage with one lender whose criteria you meet, who's offering something that's affordable for you. So you don't need every lender.
And the next one where people go, get quite lost is if you're a business owner, freelancer, or work for yourself. Because I know that one's a bit of can be a bit of a tricky one because there's a lot of misleading information out there.
Yeah, so again, same thing. So I've just bought this home, my second home, as a business owner. As a business owner, there are, some extra hoops that you maybe need to jump through. Okay. Now, it's a little bit of a myth that there are employed mortgage products and self-employed mortgage products. That is not the case. Okay. Subject to meeting criteria, you can access pretty much the same products as anybody else. The main difference as a self-employed applicant is how you evidence your income. Okay. So if somebody is employed on a permanent contract, most lenders want to see a maximum of 3 months pay slips. Okay. Yep. As a self-employed applicant, most lenders want to see your income over the last 2 years. Okay. So some lenders will look at salary and dividends. Other lenders will look at salary and your share of a company net profit if you are a limited company director. So lenders may need to see self-assessments, tax year overviews, or your company accounts if you do have a company. Okay. So most lenders will look at income over the latest 2 years. Okay. Most of those lenders, if that income is increasing, will take an average of the latest 2 years. There are some lenders that will use the latest year if you meet criteria. And main point is there are some lenders that will accept self-employed income with only a 1 year history. Okay, that's not going to be every lender, but it is possible. So an example I spoke about recently for this is quite an extreme example and it doesn't need to be like this. However, I had an applicant who was a first-time buyer, business owner with only 1 year's accounts. And in this applicant's case, he essentially sold fish. I can't remember the specifics, but he told me, Dan, I've only been in business for 1 year. However, I've worked globally in all of these award-winning famous restaurants. I've won these awards. There was an accounting projection available for the upcoming year. And in that case, because of all of the information available, the lender went, yes, 1 year's accounts, that's absolutely fine. And all of that information was information that was relayed to the lender. Now, it doesn't need to be that extreme. You don't need to have, worked globally or to have won awards. But that's a good example of the things that lenders consider.
Everyone's sitting there now thinking, right, I'm looking at getting some awards.
Absolutely not. Yeah.
And then what about, particularly as we've seen the rise of people working digitally and remotely, I'm thinking more your content creators and things like that. Have you seen many clients come your way that are in that position in terms of they are content creators, that is their primary income, or their primary income comes from social media work? Have you seen an increase in that at all?
So with this, you are essentially just a business owner. Okay. If you are self-employed as a content creator, then you are regarded as a business owner the same as any other business owner. The thing is, as a content creator, is that a lot of the time people are quite new to it. So maybe, content creators weren't around 10 years ago in the same way they are today.
Yeah.
Therefore, a lot of the time people will be new to it and therefore not have years and years of self-employed accounts. As well as that, sometimes income can be variable. So sometimes maybe people who are new to it don't have confidence in where their income's going to be in 1, 2, 3 or 4 years' time. However, if you are a self-employed content creator, you will be looked at the same as any other business owner.
Good to know. As I asked that because particularly working in the space I work in, lots of friends have said like, oh, what do you think about this? So that's really good to know that it is. I think as well, from even the conversations I've had, the lenders and people are kind of coming into the 21st century of being like, okay, this is actually a real thing now that people do this as a career. So it's good to hear that things have got a little bit easier. Just a tad.
Absolutely. Well, fingers crossed.
The other thing also, just as staying on the topic of like different ways of earning, what about how does it play if someone's got 2 jobs? So if someone's got 2 jobs, is it just that you can borrow more, you have more borrowing power, or is there any difference?
So second job income can be used to boost your mortgage affordability. Okay. So lenders will consider how long you've been in that second job for. Lenders will consider how many hours you're working a week and how sustainable that is. If you have 2 jobs and you're working 50 hours a week, that's a lot different to having 2 jobs and working 90 hours a week. Because if you were, lenders may think, right, well, you're probably not going to be doing that for the next 30 years. But yeah, second job income absolutely can be used for your mortgage affordability. Every lender considers it differently. Some lenders may ask for up to 12 months evidence of that second job income. Not all lenders. Some lenders will then use 100% of that. Some will use as low as 40% of that to boost your affordability. But the good news is if you have two jobs, absolutely that's something that we can look to use.
And then what about this one? Actually, you flagged to me, which I'm slightly embarrassed to admit. But what about in terms of for individuals like myself that claim PIP allowance or any additional income that comes from that? Is that something that can be considered in a mortgage application?
Absolutely. So I keep saying I've experienced this, but my partner receives personal independence payment income, and we use that for our mortgage application to buy both houses. Yes, so it's more common than maybe people may think. So whether it's universal credit, DLA, PIP, carer's allowance, all of these things can be used to boost your mortgage affordability. Typically, lenders won't allow it to be the primary income on an application, okay? It would typically need to be a supporting income. So in addition to an employed income, either from the same person or a partner, or in addition to self-employed income. But absolutely, those sorts of benefits can be used.
Really good to know. And I think that would be music to a lot of disabled individuals and people who claim, particularly speaking from lived experience, claiming PIP. It's one of those things that you don't even think that you can add into the number, but it turns out you can.
Yeah. So lenders typically, for a lot of these things, will ask for your award letter. To see the annual award letter, and they will typically use that figure. They may also ask for bank statements just to check that it is coming in. But yeah, the latest annual award letter is typically what will be used.
And then coming on to your specialist area, can you tell us a bit how by having a mortgage differs for first-time buyers and how the journey might be different? I know we spoke briefly about there being no chain and things like that, but are there any other differences when it comes to first-time buyers?
Yeah, so as a first-time buyer, the main challenge is taking that first step onto the ladder. As mentioned earlier, house prices are 9 times the average income. Interest rates are maybe higher than where they were 5 years ago. I believe in 2023, there was less first-time buyers than any of the previous 10 years before that. So it's a difficult time. And that means that you've got to use any tools available to you to help you to buy your first home. So that may be, first of all, working with a whole-of-market mortgage advisor who can explore all of the market, because each lender may lend you a different amount. Some may give you a higher loan amount, therefore allowing you to buy the property that you need. Also, you should be considering and hopefully using things such as the Lifetime ISA. So the Lifetime ISA is an amazing opportunity for first-time buyers. Okay. A Lifetime ISA allows you to contribute £4,000 annually. Okay. And the government will add a 25% bonus on top of that. Okay. This will contribute to your overall annual ISA limit, but it's an amazing opportunity. 2 things to be aware of is that to benefit from the Lifetime ISA, you must buy a home at least 12 months after you've made your first payment into the Lifetime ISA. As well as that, at the moment, there's a cap on a maximum purchase price to benefit from a Lifetime ISA of £450,000. So if you are looking to buy a home next week, or a home which is worth more than £450,000, a Lifetime ISA may not be for you. But what we always say is, as early as possible, open a Lifetime ISA, stick a pound in, get the clock ticking, and therefore, if you do want to use it, it's available to you.
And then there's also the stamp duty question when it comes to for some buyers. Can you explain a bit more about that?
Yes. So first-time buyers are entitled to something called stamp duty relief. Okay. And this means that first-time buyers essentially will not pay as much stamp duty as maybe a home mover would. Okay. Yep. Now, the brackets on that are actually due to change on the 31st of March next year. Okay. So I'm not confident giving you what the specifics are, but they are due to change on the 31st of March, 2025. So if you are in the process of buying a home at the moment, you should be speaking to your solicitor about, if that completes before that deadline or after that deadline, will that impact how much stamp duty you need to pay? But yes, first-time buyers are entitled to stamp duty relief. And again, that's a great opportunity in comparison to other buyers.
And then coming on to sort of linking into that, I wanted to ask, is there any schemes or anything that you're aware of obviously you briefly spoke there about ISAs and how they can support with first-time buyers. Is there any schemes out there to support with buying a home, particularly for those that are first-time buyers?
Yeah, so the main one that you may see is the shared ownership scheme. What I would say with these schemes is that they are there for people who need them. Sometimes I speak to buyers and they think it's maybe sort of a cheat code to buying a home. Let's use the shared ownership scheme. It's there for people who need them. There are positives, and these schemes can absolutely help the right applicant, without a doubt. However, it's not all sunshine and rainbows with these schemes. There's a lot to consider. For shared ownership, it is shared ownership. That means that somebody else will own a share in your property. That means that you don't own your home maybe in the way that you would immediately. You need to pay a monthly rent on top of your mortgage payments. There's a lot to consider there, but for the right applicant, shared ownership can be a great opportunity. It removes hurdles for buying your first home. And yeah, I've worked with many home buyers who have benefited from that scheme.
Is it difficult for someone to then buy, moving on from shared ownership to full ownership?
So whether you are talking, so there's two options there, either full ownership of that property or moving on elsewhere. When you purchase a shared ownership property, you buy a limited share in that property. Okay, but then the view is that you can then do something called staircasing, which is over the course of time, you increase your shares with the aim of in the future owning 100% of the property. Now, when you are looking to use these schemes, you always need to look into the terms and conditions. There are restrictions on staircasing. You can't just buy an extra share year on year. For example, some lenders may only allow you to staircase up to 3 times. Okay, so you need to plan. Okay, how are we going to reach 100% ownership within 3 jumps in our shares? Some providers don't actually allow you to own 100% of the property. Okay, so you need to be aware of those things, and as long as you are fully understanding, there can be a great option to build that share for the future. So, as an example, if somebody is in a job, let's say working for the police or a teacher, where there is a predictable increase in your pay scale, quite often shared ownership can be a great option. If you have no other options. Because you can then plan, right, in 5 years, my income is going to be this, in 10 years, my income is going to be this. And that can be, a good way to look at it. Okay. But yeah, I always speak to people and say, first of all, can you purchase a property that you want without shared ownership? If you can, let's look at that first. But just to further answer the question, if you are looking to move home and purchase another property after shared ownership, the consideration is that the pool of buyers that you are selling to is smaller because you are only selling to buyers who want or need the shared ownership scheme. Now, that's not necessarily going to be an issue, but it's a consideration.
You mentioned there, obviously, that if you've got a predictable increase coming, sometimes that can be of benefit to you if for shared ownership. Is shared ownership tricky if your income's more volatile?
It's not that accessing shared ownership is tricky. It's just whether shared ownership would be right for you. If your income is never going to change, as an extreme example, will you ever be able to own 100% of that property?
Yeah.
And if you aren't, then do you want to be paying, the extra rent on it for the next 30, 40 years, whatever it may be? But, with shared ownership, not every lender will lend on shared ownership. There's a limited amount of lenders who will lend on that scheme. But again, it's a great opportunity for the right applicant, but it's a scheme that's there for those that need it.
And then coming on to it's a bit more opinion based. Obviously, you work very much in the space of mortgages. What's your opinion on the current mortgage landscape? I think a lot of people, particularly me included, are concerned about the rates, it all going up. what does it look like in the next 10 years? I mean, no one knows. I'm asking you this question full well knowing that you're like, how long's a bit of string? But in your opinion, what do you feel is happening, and what do you think is going to be the landscape?
Yeah, so in 2019 and 2020, interest rates were at an all-time low, but that was the anomaly. Since then, rates have increased. Okay, historically, rates sort of aren't that high historically. However, at the moment, it's met with high house prices, cost of living crisis, etc. Okay, interest rates over the last few months have slowly been trickling down. Okay, in terms of your fixed interest rates. Okay, so it's good. Interest rates are better than where they were a year ago. Okay, the market is moving. When rates shot up, a lot of people didn't want to buy. It was quite a scary time. People are now returning to the market, and the market is most definitely moving. Now, interest rates may never be back where they were in 2019 and 2020. I'm pretty confident they're not going to be there anytime soon. Okay. But sometimes, as mentioned, rates have been coming down in recent months. Sometimes people will get a little bit complacent about that and think, right, well, I'm going to wait for them to continue to come down. However, you never know what can happen. They might shoot up again. Okay? So, the market is in a good place. The market is moving and people are buying homes successfully in the current market. Is it as low as ideally we would want? No, but it's never going to be ideal. If you can achieve your goal in the current market, so i.e., if you can buy the home that you want to buy on an affordable basis in the current market, then it's a good time to buy. Okay? Reason being, we never know what's going to happen moving forward.
I think that's probably the most anxiety-inducing part, is no one knows what increases we're going to see, what decreases we're going to see. We've seen everything increase recently. I think that's probably the biggest bit where people go, because I think for me, as someone in that age group that is considering buying their first home, you sit there and you think, but what if things skyrocket? How am I going to be able to manage that? So how, obviously you work particularly in the first time buyer space, so I'd imagine a lot of your clientele are a similar age group to myself. Is there any... It's hard to say because finance is a very personal thing, and I know I'm asking you a very difficult question. But in terms of how you guide clients, what do you give to sort of ease some anxieties? As we said, it's the biggest purchase you're ever going to make, most likely.
Yeah. So I always say I'm not here to sell anybody the dream. Okay, I'm not here to sell you the dream and just to sort of make a sale. That's not my job. Okay, so we will always discuss, the potential for the market, interest rates could increase in the future. Okay. Yeah. Even if you buy a home in 2019 or 2020, like I did, when I've bought my second home this year, interest rates are a lot higher. Okay. So the market is going to change. So we have conversations when applying for a mortgage of, right, your current mortgage product is affordable. We've discussed that. However, if interest rates do go up, let's say they shoot up by X amount and your monthly payment becomes this in 2 or 5 years' time, how would that look for you? Would it be affordable for you? Okay. In some cases, it might be, yeah, fine. That's within budget. It would be in budget now, not ideal, but we'd be able if we'd be able to afford it. In other cases, it might be, right, yeah, that's quite scary. Maybe I don't want to take the risk. Other times, there's middle ground. So, okay, if that event did occur, could we cut down on how much, we're spending on our social life, on, all these sets of things? Could we reduce our debts? Maybe, if interest rates do go up, but I'm expecting a pay rise over the next couple of years, so it would probably be okay. Those are the conversations we would have, okay, to make sure you are fully informed and you're not being sold the dream.
Would you say, this is a really opinion-based question, would you say that you're almost better off lowballing? Because I think I see a lot of people in my age group, they're like, oh, we could afford this. And you're like, that's going straight, in my head, I'm going, that's going straight to the red line. And then you got no breathing space.
Yeah. So just because you can access a loan amount doesn't mean that you should access the loan amount. Okay. What you need to consider probably more than anything is the monthly payment that's associated to it. The last thing you want when buying your first home is for it to be a stress and for you to hate it because you're struggling to afford it. That's the last thing you want. You want it to be an amazing thing. So maybe you should be a little bit cautious with your first home, especially as a young first person. It might be the first time that you're really having to manage your finances. But what I would say is there are other ways that we can manipulate your monthly payment. So your mortgage term, your fixed term period, those are other adjustments that we can make to bring the monthly payment down if we need to.
Yeah. How does that work in terms of what are some things you can do to reduce your monthly payments?
Yeah, okay. So your mortgage term is the amount of time that you are taking to repay your mortgage. Okay. The longer the mortgage term, the lower the monthly payment, but the more interest you'd pay if you never change that because you'd be paying it back for the longer period. That could be up to 40 years. Okay.
Yeah.
The shorter the mortgage term, the higher that your monthly payment, but you'll be mortgage free sooner and therefore pay less interest. Now, there's no right or wrong answer here. Sometimes there's a lot of pressure around this. There's no right or wrong answer. For my first home, I took a 40-year mortgage term. Why? Because I was in my mid-20s. I still wanted to have a social life, go out with friends, and I just wanted to buy the home and, to have no stress about it. Now I'm a little bit older. I've got 2 kids. I earn more money. I've reduced that. Now starting to look at, right, ideally I want to be mortgage-free by a certain age. Okay, so you're not tied in for life.
What about, you mentioned there obviously becoming mortgage free. How much power is even a question that I haven't even asked of how much power does paying back your mortgage early have? Because I think whenever you think of paying back your mortgage, you're like, oh, I've got to pay like these huge chunks of money off to make any difference. What can that journey look like if you do look at making early repayments?
Okay, so most high street or mainstream mortgage lenders will allow you to overpay by around about 10% of your mortgage balance per year without penalty. Okay, so if your mortgage is 150 grand, most lenders will allow you to overpay by 15 grand annually without penalty. That's quite a large amount that will be useful for most people.
Yeah.
Okay, now making overpayments, of which could either be regular overpayments or one-off lump sums, can significantly reduce your mortgage term or the amount that you're paying in interest. Now, there are some fantastic online calculators. So a good one is Martin Lewis, money saving expert. His website has a good overpayment calculator. You can type in your debt, your interest rate, put in how much you would like to overpay by, how many times you would like to make that overpayment, and that will tell you what the saving looks like. So if you are looking to be mortgage free sooner, an overpayment can be a great option.
And then lastly, this is a bit of a left field question, but what about, because it's a question that I think no one really answers. What happens if you can't make a mortgage payment? So what happens if the worst does happen, your circumstances completely change? What does that look like?
So if you are ever struggling to make your mortgage payments, first thing you need to do is speak to your mortgage lender. Can they offer you any flexibility at all? Some lenders will do what they can to help you. Okay. So first port of call is always speak to your lender. Don't be scared. If you tell them that you are worried that you're going to miss payments in the future, they aren't going to cancel your mortgage. They aren't going to kick you out immediately. Okay. You need to miss a lot of payments before you have your house repossessed, as an example, as an extreme example. Mm-hmm. Okay. But every lender is different. So go straight to your lender. Find out what's possible, and if you do miss payments, what the process looks like.
It's really good. I think it's a question that not many people ask. That's why I really wanted to ask that, because it can be quite, I think for someone who doesn't know, you can feel, like you say, it's that whole thing of, oh, I've missed one payment, they're going to take my house tomorrow. And that isn't how it works. It just, as I said, there's lots of things that banks can do to ease that pressure. They're not as evil as some people paint them out to be.
Absolutely. But obviously, as we both know, obviously, please don't miss any payments.
No.
If you can avoid it, your house could be repossessed.
And the other thing I would always add, as a conversation that I have with friends a lot, is also don't miss any credit card payments either, especially if you're applying for a mortgage.
Missed payments in your credit history can have a massive impact on your mortgage options. There's a real lack of awareness and lack of care, especially in young people. I look at credit reports every day. Quite often people don't understand the impact that missing payments can have in the years to come. So yeah, be aware of your credit history, respect your credit history, don't miss any payments. And yeah, you don't want it to be a problem 5 years down the line if it's avoidable.
Especially, I think another piece of advice I would give is, as you've already given, is think ahead. If you know you want to be buying a house in the next 3 years, make sure everything's as up and dandy as you can get it.
Absolutely. Absolutely.
And then lastly, I'm going to ask you the question that I ask every guest, which is, what's one piece of politically correctness that you really strongly agree with or disagree with?
Okay, so I'll link this to money. And it is social norms and social pressures or family pressures about how you spend your money. Sometimes I feel like especially parents can guilt trip, children about how they choose to spend their money. For me personally, well, first of all, if you are not in any financial distress, you're not living in your overdraft, you're not missing payments, you're not stressed about your money, spend your money how you like. So for me, I love spending money on convenience. I'm a big convenience person. I really like to minimize any stress in life. You know what? If you want to get a cleaner for the house, if you can afford it, once a month to help deep clean your house because you can't be bothered to do it on a Saturday or a Sunday, get the cleaner. Yeah. Okay. Sometimes parents will be, that's a waste of money. You can do it yourself. Stop being lazy. If you want the cleaner and you can afford it, get the cleaner.
What is your favourite convenience thing that you've done?
It could be anything. It could be a taxi when some people may argue it's walkable. I got told when I first bought my first house, I'll never forget, I got told off by my mum for buying pre-grated cheese. Do you need to spend the money on pre-grated cheese? You can just grate it yourself. And I was like, Mum, I just wanted it pre-grated.
And it also for the difference, if you want to do it, you want to do it. I mean, I think the other bit I would add to that is the social status game that a lot of young people end up in of like, oh, I'm like we've said, the first time buyers have gone up to, I think you said around about 34 now. Is that thing of like, oh no, I've got to be at this stage of life at this age. That would probably be another caveat to that I'd add of like, don't fall into the peer pressure, parent pressure of I need to be here, need to be there, do what's right for you. And also that comes back to mortgages as well. Only do
absolutely.
When you feel ready.
World's changing. The world's changing. What the age is getting higher. One, 'cause it's getting harder, but also people are traveling more. People are changing jobs more. Absolutely, don't feel the pressure for home ownership. Home ownership is always going to be there. So do what's right for you in your life now.
Perfect. And that is a perfect ending. But thank you so much for coming on, Dan. Of course, I will link all of Dan's details below if you want to get in touch with him or just do a bit, reach out to him or anything like that. But thank you again for coming on. It's been a really good conversation and it's something that I want to raise awareness for more, particularly when it comes to personal finance and money, because it's still seen as a bit of a scary topic.
Absolutely. It's been a pleasure. Thank you very much for having me on. It's a great podcast. And yeah, I hope it's useful for your listeners.
Thank you so much for tuning into this week's episode of the Not Quite Podcast. Please make sure you follow us on TikTok and Instagram to get regular updates about the podcast. These my dads, they get hurt.